Yeah, welcome everybody for the second panel. Now this is going to be the container ship panel this morning. And I'd like to introduce the panel members. First one, Dimitris Dalakouras from Conbulk in Greece, a privately run company. They have 35 container ships in the sizes of 1,000 to 6,000 TEU, and just managing one tanker and one bike carrier. Then next one is Aslidis. He's from Euroseas. They're listed in New York. They have about 25 container ships of 1,400 to 6,300 TEU. And then they have, of course, a separate dry bulk entity, but a pure play on containers. Then next one is Torben Kölln from Leonhardt and Blumberg. They have around about 25 container ships, and they have recently invested in tankers and in small dry cargo vessels, privately run out of Hamburg. And then Constantin Baack of MPCC. MPCC has around about 60 container vessels of 1,000 TEU to up to 5,500 TEU, listed in Oslo on the Oslo Stock Exchange. So we have here 2 private ship owners and 2 listed ship owners. And I'm from Toepfer Transport in Hamburg. We are ship brokers, S&P brokers. We do new buildings and second-hand. I personally do mainly container ships. That's why I have the honor of leading the panel. And we also do a lot of MPP ships, and we have particularly research on MPP heavy lift and dry cargo ships, the small dry cargo short feeder ships in the Baltic, where also Leonhardt Blumberg has recently invested. On the container market, obviously the container market has benefited heavily from the Houthi rebels this year. Of course, the container market was, during COVID, everybody knows, made a lot of money. Last year, 2023, was pretty good also because of the Ukraine war, because it took out a lot of ships into inefficient trades. Out of small trades, the Chinese started trading with 1,000 TEU ships from China to St. Petersburg, very inefficient, but it took many ships out of the market. And then 2024 was perceived to be a difficult year, and then came the Houthis and changed the market. We have a huge order book, and everybody expected the market to change heavily. But because of the Red Sea crisis, the order book really hasn't been felt at all. The box rates are the highest outside of COVID, so everybody, the liner companies, again, make a lot of money. And now the order book is big, but we have seen many, many new building orders over the recent months, and there's another wave of new building is coming later, so the order book on containers is again above the 20% of the fleet size, which is quite substantial. Now, I like to ask my panel members. I made some research before, and I found a bank account where the Houthi is going to take donations. And I would like to ask you who would be willing to donate the Houthis some money. Nobody. And now it applies, ESG rules apply for it, because it goes also for food.
I mean, definitely what is happening in the Red Sea has affected drastically the fate of container ship operators. You said yourself that in 2024, the year marked a turn in the rates after being driven to very low levels last year. So sadly, the developments there affect positively the container ship market. I think all of us would like to see the situation in the Middle East normalize and peace prevail. Unfortunately for the world, fortunately for shipping and investors in our shares, in our companies, the current situation helps keep the rates high. We wouldn't go as far as providing donations.
Well, actually, the Houthis are collecting money for that, but I guess they are collecting money more internally, and obviously the money comes from Iran and elsewhere. But the Houthi situation obviously has changed the market a lot. And I wonder, Dimitri, you are trading with strips through the Red Sea, and you were very brave and going with a ship which is financed by US money to go into the Red Sea. And I wonder how the hell did you go with a ship into the Red Sea which is financed by Americans?
Well, most of our vessels are financed by entities related to the USA. We do not have a political agenda as a company. We have feeder vessels. We engage in regional trades, I think for the economic benefit of each region. We had 3 vessels trading in the area. One actually was going from Djibouti to Yemen, back and forth. Until our incident, the Houthis were avoiding to engage with vessels trading on regional trades. They were actually targeting mostly the vessels trading, passing from the Far East to the Mediterranean. At the moment, of course, we have stopped trading there. This will cause a very bad, it will have very bad consequences in general if everybody stops, to the local economy and to the local economic entities, including the Houthis themselves. So I think our willingness to not be involved in politics seems to have come to an end, really.
So you pulled all the other ships out of the Red Sea trade as well?
Well, no vessel is trading now in the Red Sea.
No trade?
We have decided to basically, it mainly has to do with the crew safety. Once the crew is in danger, all the discussion stops, really, at the end of the day.
Does anybody of the other panel members has ships still trading there, or did you have any experience on any happenings in the Red Sea?
You want to answer? Yeah, happy to take that. I mean, we discontinued trading immediately because the safety of the crews is of utmost importance, and earning a few dollars more doesn't justify any of this. So we actually were also in quite tough discussion with some of our charterers, because the charter parties obviously included clauses that did not prevent them from trading through the Red Sea. But we stood strong, and we did not accept that, even having some very bad discussions, admittedly, with some of our charterers. But we stopped it, and we will only continue once there is safety for the crew, and I think that's the overriding principle from our standpoint.
That's the same for us, and I had actually quite interesting conversation recently when a charterer asked me, well, you can pay a premium to your crew and then they can decide themselves whether they want to go through. I mean, you can argue that that's true for the crew, that they can take their own risk, but we have seen that there's also an environmental risk, and who's willing to take that. So for us, it's an absolutely no-go to go to Red Sea, and also now we extended the area to the Gulf of Aden. It's a war risk area. Every week, every second week, we hear terrible things out of that area, and I cannot understand how you can still go there. It's insane, actually.
The same holds true for us. By and large, we avoid, and we put in our charter clauses, that avoid going to Red Sea, by and large.
Yeah, but what do you think? The Red Sea obviously is benefiting the container market heavily. And how long do you think, not how long the Red Sea situation will go on, but do you think if it goes on, how long will that keep the overcapacity coming from the shipyards under control? Dimitri, what do you think? How long will, if you know, the Houthi crisis or the Red Sea crisis will be there half a year, whatever. But when do you think the market might change in that situation or not?
Well, there are two main things. First of all, is the actual duration of this crisis. This could end tomorrow morning, or it could last for years. Nobody really knows. At least none of us knows. The second issue is the expectation of the duration, and this is what creates the effect on the market. The moment liner companies expect it to last longer, they act accordingly. They charter vessels for higher levels for longer periods. If they expect that it will end tomorrow, they will abstain from doing that. In general, I'm of the opinion that liner companies can afford more expensive vessels for longer, but they cannot afford not to have any vessels for their services, and therefore, for as long as this situation is there, I think I expect them to charter vessels for longer periods and for higher rates, even if everybody expects the duration of this to end, let's say, in a month or two.
Constantin, what do you think?
Well, the additional TEU demand or mile demand is around 17% for this year. Additional tonnage that was delivered roughly 10%, which is enormous. So there's still a disbalance. If we look at some data points of where we are today, we are still seeing, even for smaller ships, forward fixtures. So we are still fixing vessels on Q1 2025 positions, very small ships actually. So that gives you an indication of what the liners think, how long this will last, right? At least well into next year, securing vessels well ahead of the time where they actually need it. So I personally think there are a few data points that show that, you know, there is a longer tail to the issue, at least on the planning of the liners. And for us, obviously, as a tonnage provider, that's the important part. It's not only about the Houthis, it's also about how do the liners cater for maintaining their services. And there are a few events. If you look at container shipping and disruptions from geopolitical events on the different shipping segments, you will see that containers is usually by far most affected, simply because it's a logistical chain, right? It's a supply chain. It's not point to point like commodity shipping. So there's always a bigger impact on container trade, and you see that also in the additional TEU mile demand now due to the Red Sea situation compared to other sectors. So I'm saying the container sector is most affected by disruptions, and I personally believe the world will remain to be volatile and challenging, be it the Red Sea, be it Ukraine, be it other global issues. I personally think that will be something that the liners will cater for going forward, and therefore there will be some extra capacity they always keep up their sleeve also for the years ahead. So that's, I know, a very general statement, but I think that is certainly, when you look at containers compared to other sectors, something that we will see as a continuous trend unless, you know, the global landscape changes and everything is in peace.
If I can add, that this is very right, and the benefit for the container sector is the presence of the liner companies and the network, the loops they have to put in place. So that creates some further obstacles to change it overnight. In the dry bulk sector, the tanker sector, you can decide changing the routing pretty much overnight if the Red Sea opens. In the container sector, it requires design and of the new routes and putting it in place. So it will definitely take longer time for the situation to normalize when the issues in the Red Sea go away.
Now,
I tend to disagree, Clemens.
I want to challenge you. I want to challenge you next on that as well, and ask you about that, because the box rates are dropping for the container lines, as they usually do. We heard of a lot of pre-shipments as well, so I wonder for you, Torben, two questions. You know, how far are the box rates, which we see dropping, and we hear about suspension of some services, particularly during Golden Week time, etc. How is the correlation between the box rates and the charter market? And then the second question for you on that, you have been selling container ships and investing elsewhere. Would you be a seller or buyer today on container ships?
Yeah, I mean, in general, we have just learned that we have a 25% order book in container shipping. We hear that box rates are falling. We hear that it's all based on geopolitical topics. And I'm always naive and hopeful that there is peace around the corner and there will be a change in the solution, maybe not tomorrow or next year, but anytime soon. And at that specific moment, liners will start trading through Red Sea again, and then it will all collapse. And I heard earlier in the dry bulk that the container market is about 10 years crisis and 3 good years. Why should that change again? So I'm much more cautious. I see all the positive short-term momentum with all the problems we have, with the disruption we have. And if you ask me to make a buy or sell, if you have a younger vessel and there's an opportunity and you can fix it for 2 or 3 years, why not buying it? It can become a good investment. But whether it's really a good investment, you only know when you have the right sales situation. And for us, it's much more now selling ships which are maybe debt-free and cashing in and then looking to other markets as well. So that's our look at it.
Yeah.
I don't think we said that the situation will continue in perpetuity. I think when the problems go away, it will take a little longer for the situation to normalize. Definitely the container ship market has to deal with a pretty big order book that is there. It came down and it's picking up again in the last couple of months. So it's a challenging sector for sure.
Yeah, traditionally always the winter is the most difficult part. So I'm actually, I'm as a broker, have acted for a lot of people on the selling side, and I'm advising at the moment people for buying, at least on ships. I'm advising them to wait rather for the winter and then see what will happen. Now, we had the similar question before, and maybe we don't have to elaborate too much on that, but I was looking as well at the US elections, and today we obviously have the discussion in the US. And how much do you think is really this pre-shipment of cargo? That we had the logistical issues, people wanted to ship it early, not to be caught out, of cargo delay, and B, the possible tariffs coming. Particularly, if Trump will be elected. Do you think there's a lot of truth to this, or what's your take on it?
Happy to take that. I mean, clearly, the whole Red Sea situation has 2 elements for container shipping. One is additional TEU demand, and the second one is more volumes. And to a large part, the more volumes are linked to advancements of shippers, not only linked to Trump, in my view, also linked to the Biden administration tariffs that will come into effect as well. There might actually be, with Trump potentially winning the election, there might be an additional spike because people might advance even more because they are more concerned about the tariffs. Because a flat tariff scheme will obviously, in my view, will be basically a consumer tax in the US, and that is negative for container shipping in any event. But definitely there is an advancement of shipments that you can see in the volumes, and that clearly has meant a much earlier peak season this year than in the past. So there is definitely truth to it.
Let me go a little bit to a different question. I remember ships which were built 2006, 2007, 1,700 TEU container ships, I think even up to 2,000 TEU container ships, which ended up with 2 main engines, 2 4-stroke main engines, because there were no 2-stroke engines available. And when you hear about the shipyard capacity or availability of when they can deliver ships, it's not about the berth availability, but it's about the engine availability on the 2-strokes. So if you want to order a new building now and you don't have a main engine yet, it will be at 2028 when you're going to get the engine. Now, that reminds me of 2006 to 2008 when we had the similar situation. But what's different this time? Tassos.
I think, as you said, the delivery lag is up to more than 3 years. If that was the case in 2006, there isn't much difference, I guess. That pushes the ordering, the effects of the ordering down the road. I think the concern that we have, at least at Euroseas, is the order book at the level that it is now, forgetting for the time being what could happen if more orders are placed. I think the market still has the challenge to absorb that order book that is due to come in 2020, the remaining of this year, the next year, and 2026, and then worry about 2027 later on. So that is really the main concern, and one really has to look sub-segment by sub-segment. We take some comfort, not too much, but some comfort that on the feeder sectors, the order book is way lower than the percentage of ships older than 15 or even 20 years. So we believe the supply dynamics on the feeders are better. The question there remains how much of the demand that the feeders enjoy now will be kept or be taken away by larger ships. So it is, one thing is the ordering, and when this current, the recent wave of ordering would affect the market, but the more imminent issue is how to deal with what is coming the next couple of years.
Torben, do you think this time it's different?
No, I share that Tassos' view completely, and if you miss one main engine for a half year or so in 28, 29, in the overall picture it does not make a big difference. And there's still time to go, and we know Asian shipyards, especially Chinese shipyards, they are always very creative in finding main engines somewhere. So I don't see the scenario that we start building container ships with 2 4-stroke main engines again.
No, I also, these mistakes, even so, these ships were not so bad with slow steaming sometimes, because you had one small 4-stroke engine, so it was not so bad. No? Now, you're going to have a change in the liner consortia next year in February, and you have the link of Maersk with Hapag-Lloyd, and then MSC made just yesterday some announcement about link-ups with other companies. But this change in the liner consortia, particularly if you look at Maersk and Hapag-Lloyd, Constantin, how will that influence the demand for ships, if any?
Well, first of all, we're talking 300 ships, so it's and larger ships, so it's a very sizable operation that they do to their whole service offering, with new hubs being established. So basically a new hub-spoke system connecting new ports, right? Not the main east-west ports that we have seen in the past as kind of the key hub-spoke system, but also other regions. It will, in any event, they're doing it to improve reliability. That's understandable, and also to bring down costs. But we already know that, this will eventually, and they are already talking to some of the smaller feeder operators or intra-regional operators to basically provide them with cargo requests. So there will be additional feeder needed in order to service these hubs, because if you have a reliability on your hub-spoke system, you're very vulnerable on any centralizing and decentralizing cargoes from and to those hubs. Of course, there's also a shuttle scheme, so they shuttle from those hubs to other main cities, but then there's feeding needed as well. So I personally think it will be seen when they start, to what extent they can work with the intra-regional operators. I'm sure the unifeeders and others of this world will have a significant benefit from it, and they will then need also some additional smaller ships. But that remains to be seen, because we have also seen a lot of ships being chartered by the different alliance partners over the last couple of months and quarters. But I think on a net basis, it should actually create some additional demand also for smaller vessels and additional feeding into the arteries of global trade.
Yeah. Dimitris, do you also think it's going to be maybe a longer effect, or is it just going to be for the startup time and then they're going to be very efficient in their own systems?
When we say that we benefit from disruptions, any event that creates some harmonization and efficiency in the market, of course, goes the other way. Of course, these alignments are expected to take effect in the bigger vessels, in the most modern vessels initially. Theoretically, it should not be good for Trump owners, any liner company, let's say, coordination. But in combination with the fact that the feeder segments are, the fleet profile is not so young, and there is a lack of feeders, no matter how you do the matrix of the container trade. The more bigger vessels come in, there is a need for feeder vessels. We expect that all this overbuilding of ships and coordination to create some more, let's say, obvious demand for feeder ships. So it goes a lot of ways, but I think down the line we will all benefit from this. We have a bit more clear horizon of what's coming ahead of us.
Okay, thank you. Tassos, last time we were here in October 22, I was moderating the panel, you were sitting there as well, and your stock price was $22 in New York. Now it's, I just looked it up this morning, it's 41, it was at 46, now it's at 41. And what have you done right over the last 2 years?
No, thanks for the question. Obviously, we take pleasure seeing our stock price reflecting the value of our fleet. I think one major thing that happened over the last 2 years is that a lot of uncertainty about chartering of our new building program has been removed. So I think that was really an obstacle for the investors to invest and appreciate our story. We have chartered 7 of our 9 new buildings, which have been delivered, and we're about to charter the remaining 2. So that was a big change, the removal of uncertainty. The second one is obviously the market that improved over 2023. Our stock traded in the low to mid 20s. In 2024, when the market improved, that also got reflected in our stock price. And I want to believe that the market appreciated also the consistent strategy that we have developed, the management of the company, and the dividend that we are offering. We started paying a dividend again in 2022, and during last year and this year, it became, I think, clear, and we communicated very clearly that the dividend is supported in the foreseeable future by our earnings and by our contracts. So all of this combined, I think, have moved our stock almost to levels that are twice than the ones that you quoted. But still, we believe we trade significantly below our net asset value. I think we believe we traded 70% of our net asset value. So there is a lot of room for further appreciation.
Yeah, it's actually interesting, and I think you actually got also very lucky because of the situation, because I recall having discussions in the winter time when people say, Clemens, watch out for Euroseas, they have a big order book, and if they don't charter these ships, they will have problems. So keep a close eye on them, and then obviously the market changed. So lucky for you, but good move, bold move on.
Oh, we're definitely lucky.
Yeah.
Because of the change of the market.
But for you, Constantin, you're paying out lots of dividends. Will you continue paying dividends? You had already this year, I think the dividend yield already just from the first 2 quarters is 28.5%. Last year, overall, you paid 40% dividend. What will you do in the future with all the money you're making? Still paying dividends, or when is it time to spend it on acquisitions?
We actually haven't just paid dividends, we also paid down debt, and we did a lot of acquisitions. So I think that's, I mean, obviously a very unique market environment in containers over the last 4 to 5 years, and very fortunate for those who have steel in the water and who were able to benefit from it. So we have done, I guess, a bit of everything. We have paid over the last 2.5 years 900 million in dividends. We've invested more than 500 million in new ships, including new buildings, including a massive retrofit program on 20 ships in our fleet, which, by the way, even for smaller units makes a lot of sense. We have retrofitted 1700s where we get 20% more efficiency, so that's quite good. And we have paid down debt, so we have 2/3 of the fleet unencumbered. So I think it's not about just paying dividends, it's about finding the right balance in your capital allocation decisions, and it is a mix. But to your question on dividends, we will definitely continue to pay dividends. We have a clear dividend policy in place that will continue. As earnings go down, dividends will go down, and I think that's the natural path that one should take. But we have also invested massively, and we have divested a bit, and maybe also to your point earlier on buying or selling, I think in the market environment like this, you should always be a buyer and a seller. You should sell the vessels that probably don't have the brightest future due to age, dockings coming up, or also the pure efficiency. And if you can buy ships that are completely de-risked through a charter, which was possible this year. So we bought ships and got EBITDA locked in at the same price of the acquisition price. So that's the way you should manage your portfolio, because in the end, as an owner, and we're a pure owner, it's about managing residual value, risk, and upside. And that's in my view key, and that's why you should always be a buyer and a seller, but you should also stick to your words and stick to your dividend if you've promised it.
Now, Constantin, you're CEO of MPC Capital and CEO of MPC Container Ships. Now, when you buy ships, how do you decide which one goes on the private side and which one goes on the public side?
Well, MPC Container Ships has its own balance sheet, is in the container market, and MPC Capital does all kind of things, renewables, a lot of renewables actually, also other sectors. So for container ships, MPC Container Ships has clearly the first right.
Okay. And you mentioned the retrofits, which you have done. Has anybody else in the panel done retrofits on their ships? And if you do, how does it work with the charterers? And how much do they share in it? Do they pay for it? Or what's your experience on retrofits?
We have done retrofit in one of our vessels and are about to do in another 3. The Conbulk fleet is mostly older vessels. Our average age is 18 years. So retrofits are done in coordination with the charters, and depending on the future use of the vessel in terms of charter, they have all agreed to pay the proportion of the future life of the vessel in terms of the retrofit.
So they only pay a proportion for
it? Well, we have a vessel for 5-year charter, and the liner company paid 100% of it. We had a vessel for 3-year charter, and the liner company paid 60% of it, which is basically 60% of the until the next special survey. So I think that is fair enough, and this is a good formula, and I think that the liner companies are prepared to go that way, for older vessels at least. For more new vessels, I think it's a bit more complicated, because the economic life goes way beyond the usual charter in place.
We have done also retrofits, and with somewhat similar model. In one case, the charter paid the whole cost. In another case, we split it. In another case, we paid it ourselves. So that is a way to make a big contribution, I think, to the fight against gas emissions right now, as opposed to build a ship that will, with a dual fuel, that will have some contribution in the future. And that's a program that we want to continue for our mid-late ships. I think ships built around 2005 to 2010 are probably the best ones to benefit from these types of retrofits.
Now, Torben, you have financed yourself particularly out of the KG market many years ago. And that's how Leonhardt and Blumberg for many, many years and the Bus Group were financing the ships. How do you do it today? And do you think, or what's your experience on German investors in ships? What's the current situation on that? And how do you go forward yourself?
I met Constantin yesterday, and we were thinking to renew the KG market maybe anytime soon again. But joke aside, realistically, the retail KG market is gone. Regulations are forbidding that scheme. It's becoming too expensive, and that's all for the good. So our financing today on the equity side is done by our shareholders, the Leonhardt family and the Killinger family behind Post Group. And of course, we also do some club deals, friends and family, and some financing in the Norwegian market. But for us, being a traditional ship owner for more than 120 years, we've also learned that we should not overly rely on equity from third-party investors. So every investment we do today, eventually we buy the vessels, assets by ourselves. All the new buildings are 100% owned by our owners for now, and then at a later stage, if we believe timing is right for the project, we would invite friends and family or some institutional investors. And that's more healthy for us going forward. We've seen the crisis 10, 15 years, and when you are hanging there with a lot of over-debted vessels and only by the support of the banks, it's not only a good time. So there we have learned our lessons. We are happy that we survived, that COVID came in, and we could make the best out of it and having a healthy fleet today. But the KG market is not coming back. I don't think so.
And Dimitri, how do you finance yourself at the moment and maybe going forward? Is an IPO planned? I mean, you're mainly US investors you have there, and what's the exit strategy then? Is it going to be an IPO or what, individual ships, or what are you doing? Because so far you have not really sold many ships.
We have sold about 3 or 4 vessels. The reality is that we have decided to sell more vessels, but this current market situation with the opportunities for charters for 2 or 3 years made it obvious that we should, instead of selling, chartering the vessels. We are exactly the opposite from Tom's business plan. Not that there's something wrong with it. Conbulk is not a corporate entity. We create projects for investors. We do fundraising. We are always a minority, and the investor has the upper hand. And we have different investors from different spectrums of let's say, ideas about how to use their money, and we adapt each project accordingly. So the exit is dictated by the investor. We give them the flexibility and the opportunity to decide upon themselves. Our main concern is to have alignment of interest with whoever invests in any project we do, so that there is no, let's say, difference of opinion, and we have been very successful to do so. Our focus is mainly on the downside and on the unforeseen situations. The upside, of course, nobody complains. When somebody makes money, they can sell or they can charter out for longer. That's very simple. But our main focus in our project is to make sure the investors don't lose any money.
Yeah, you mentioned downside and upside. So, open question to anybody. Who do you think that we have more downside risk or more upside potential looking forward?
I think the challenge, I will repeat that the challenge is absorbing the order book. So, barring continuous disruptions or continuation of the current geopolitical situations, the challenge is to absorb the order book, and thus probably there is a little bit of more on the downside on the container ship sector.
I would basically say, if you look at the overall market, yeah, the overcapacity risk is clearly there, but that means markets might come down, but I wouldn't say that is a downside. It could also be quite an upside if you have the money available. I actually think that might constitute a great opportunity in the next maybe 6, 12, 24 months to also be able to buy at on different levels. So I think, yes, there is this overcapacity threat. Having said that, as owners, if you have a good runway and a lot of charters locked in, as we have, for example, I'm actually ready for volatility in a way, because that certainly creates opportunities, and you can act on those opportunities. So overall, I think the stars are not aligned, but the stars also haven't been aligned end of last year. I mean, I was really thinking 2024 is a year to fasten your seatbelts. And the opposite is the case, right? So we now have runways in 2027 on a lot of ships. So if the market drops in the next 1 or 1.5 years, that's actually an opportunity if you can deploy capital.
Yeah, and I agree with it. And I remember how Dimitris once said to me, Clemens, I wait for the time when you call me at night and say, now it's the time to buy. Now is the time to buy. So keep your phones on at night. You know, there's going to be hopefully going to be buying opportunities. Because the market is I'm sure we're going to see not a straight line with the Houthis. We're going to see ups and downs, and volatility in container shipping has become very big, and there will be interesting opportunities going forward. Thank you.
Thank you.
Thank you.
Nicholas, thank you.